All right. Good morning, everybody. So we got the data the market was looking for, and the push at this point is getting attributed to the idea that we will get a rate cut at the next meeting. I think the last number I heard was a 92% chance of a 25 basis point rate cut. Oh, it's at 96 now. Uh, you know, Powell's been pretty emphatic on this. He doesn't want to cut. He believes that the market is overheating and if they cut, it will jack up inflation. And we are running hot. I mean, there's no way to argue against that. We're running hot, and who knows what's going to happen if they cut. The thing is, they're not supposed to be predictive, right? They're supposed to be reactive. That's just the way it is. So I'm not saying he's right or he's wrong. That seems to inflame everybody's politics, and I don't care what your politics are. You shouldn't care what mine are. It's all about the charts. At this point, if he doesn't cut, the market will throw a big temper tantrum. They will get salty, and we will see a response, very likely, to the downside. Until then, however, the market is pricing in a cut, and I've already heard a number of administration and Fed officials say, well, we are behind the curve, and if we are going to start cutting, go big or go home. 50 points would be appropriate for the first cut, blah, 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 blah. So we got the juice and we popped and we broke the range and headed to the upside and got into new highs. We did not get 57.10 yesterday because it wasn't that good, right? The the numbers that we got weren't good. They were just what the market was looking for, and that's why we went up. If they were really good numbers, we would have got to that 57.10. But you can't prove a negative, right? We didn't get it, so we didn't hit my number. And how can I prove that we would have hit my number if we had gotten better CPI? Can't. We'll just never know. So this is where it stands right now. All right. Keep your eye on anything that can take this pricing out of the market. If this gets unwound, we will go in the other direction. Now, Jackson Hole is coming, and Powell has a history of kind of, you know, doing his own thing on Jackson Hole. And he does have a backbone, while most of the time we seem to forget that, because he just sits there like one of the bobbing head dolls on a dashboard without really saying much. But it would be interesting to see what he has to say at Jackson Hole and whether or not he's going to push back against this cut narrative, and especially a 50 basis point cut narrative that we're hearing now. Still, we won't know till we get there. So if we start to see data or anything that could unwind this market's expectation of a rate cut, we will see things begin to stall out. The flip point today is 63.20 in the SPX, not the ES, right? I know we normally talk about the ES. 64.29 is the reference price. Is where we stopped yesterday. It's really close to 64.32 cog line. Sixty-four 64.50 is the next big one in play, right? Because we're still running 50s. And 6,400 is the one underneath us. We're kind of trapped here, right? We got 6,425 and then 6,400. Then we get down into 6,320 flip point. We are green on the screen around the world, what the Bloomberg would talk about as the animal spirits. Everybody's all riled up. They're bullish. They're looking to take risk. We are, quote, risk on, right? So Hong Kong is up 0.5%. Japan's basically flat, just trying to stay green. Europe up more than 0.75%, depending on where you look, right? We got the UK flat, Euro stocks close to 1%. Small caps 0.75%, and the Dow down around 0.25%. NASDAQ and the S&P really not doing much at 0.25%, right? It's all small caps again this morning. And we've seen, that's not sticking through the day. They're just getting a lot of that push in the overnight. Then we flip. We see money flip, right? So we're going to hear from these three Fed officials today. They'll be out chipping their teeth. Bostic, Goolsby, Barkin, and it's very likely that none of them are going to say anything prescient, right? No shock and all there, nothing new. They're just going to seem from the same hymn book, because they're just bobbing heads with no real personality of their own. Is borrow somebody else's. It is Wednesday, so we're going to get the crude report at 10:30. 20 years ago, crude was one of the biggest drivers of market moves. And that, of course, it's not really the deal anymore. But you don't want to sleep on it, right? Pay particular attention to crude when it comes out, because this also ties in with the administration and the nation's petroleum reserves. I know that this isn't really the forum for anyone to nerd out, but it matters, right? So pay attention to the crude report today at 10:30, especially on a day when we don't have much of anything else happening. Markets get bored. I like that, right? Like we're all a bunch of kids lost our cell phones and going a little ADD. Markets get bored, so they'll latch onto anything to give them something to do, including crude reports. Once we're done with that, we have Bostic this afternoon, but otherwise, news out of the White House could give us some headlines. There's supposed to be a phone call with Ukraine today, and there's supposed to be a meeting with Russia this week. News on either one of those fronts could send us gyrating off into different directions, and it could come right back to the crude report too, right? Some of the actions and sanctions we're putting on Russia include Russia's energy and who they sell to or who's buying it. Yeah, there's Secretary of Treasury Scott Bessent chipping teeth, talking about how we should be much lower than where we are right now, and how there's a good chance of a 50 basis point rate cut. Yeah, okay. This is what's driving this push in the market, right? And if the market no longer believes or no longer is drinking the Kool-Aid, then it's very likely we're going to unwind it all. It was all a sentiment drive yesterday. I was using TrendSpider's Sidekick this morning, and it drew these lines. Yesterday, of course, took that new position in ONDS. I was already in it, but I wanted to do a public one because, we're always talking about doing the wheel strategy and the covered call plays. And this is just a really cheap, liquid one to use for that example. So I thought, why not throw in a little bit of AI assist with it? AI drew these lines. It drew this zone, and it wrote out a real detailed analysis of the stock, its earnings, its holdings, its options, ran a benchmark against the industry that it's in, against the broader market sectors, did a really interesting job. So I posted that in the chat. Work your way through it at your leisure. Just be mindful the entire thing was done by AI, all right? So do your own DD, but it's just interesting that if you know what questions to ask, AI can do a lot of the legwork for you. Still shouldn't be telling you what to buy or when to buy or anything like that, but it can certainly help you gather information. I was having that talk with somebody yesterday, right? That's mostly our job as traders, is just trying to find information to make a more informed decision. I'm not your Google, right? Don't ask me some simple thing when you can just as easily ask Google, what's a wick? Overnight risk, 52,000, close to 53, really. We're in line, nice and normal, sitting where we have been for the most part. Nothing out of line. We had a relatively narrow IB and stayed in it until Europe. Now we got the breakout. We're keeping it holding above VWAP. Inside day breakout continues with that hard drive from yesterday with the 6,400. We're above all the major moving averages with a nice fork pattern on those moving averages too, right? They're already out of their tangle and stretched nicely. So, of course, marking this the way we normally would, and this is just your basic scoop pattern, right? Would have been better on a weekly, but we'll take what we can get. When you have this sort of pattern, just mark it from its high point to its low point. Every single candle book talks about doing this, right? Measuring ranges and extrapolating from that range the projection to the upside or the downside. What it gives us is our 50%, which, we were hung out there for a while. Now we're back to the top. We're getting our breakout at the LZ in orange and the OCC in green. OCC, opposite candle color or doji, right? I never finished that sentence, but that is the complete sentence. So when we get to that green line, we expect to see a change in color or a doji, one or the other. It's just a pause, right? And or a reversal. We don't know if it's going to reverse there or pause there, or it's where it should pause, the bare minimum, digest the move that it made, give us another signal at that point. But if the breakout is going to fail, it very likely will do it against 64.92 cog line, the LZ right there, the orange line. If the breakout is going to fail, it will likely do it there. Of course, we could just get a Busby, right, where we break out and then we come back and test old resistance as new support, which is the very definition of a Busby, and then continue to the upside, whatever that upside may be. Most trends in history started with price in a range that tested the range, and finally broke out of the range. And after it broke out of the range, it pulled back to check old resistance as new support, Busby. So Busbys often come before some of the biggest trends in history. Ain't that nice? We're closer to the upper ADR than we are the lower ADR. The upper ADR is basically 6,500. Spot Gamma shows that they rolled the put wall down. It wasn't in our way to begin with, right? So kind of think that through for a minute. Seeing the put wall roll down implies they're making room for the downside. We already had plenty of room to the downside. It wasn't interfering with us in any way. It's more likely that the options that had made the previous put wall are gone, right? They expired yesterday, for an example. And then by default, the program just looked around and found the next level of structure, and that became the new put wall. That's a completely different function than them going in actively pursuing a roll into a different strike. right? Now, we don't know which one it is unless we go back and look at the options flow and or we have this level for multiple days, right? And since OPEX is getting closer and closer by the minute, we likely would only be able to see that by looking at the data from yesterday, because we're going to run out of days to see if we stay at this new put wall for multiple days. I would expect that it's going to move again and then again. It is interesting to note that it's OPEX week and we don't have a market maker move every day. Most weeks where we have an OPEX, we see that market maker move level every day, right? Because they're just coming in and they're just moving a lot of stuff. And they're not. If they were, we would see it. It's a little odd. So they're waiting until the last minute, I guess. I don't know. Maybe they've already moved it, or they're just doing it in a subtle pace and they're not triggering the market maker move this morning. Or really at all. Yesterday we had it, but it was CPI, right? As soon as we were done with CPI, it went away. Today's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. And so far today, we have an MDP. That's a missed daily pivot, MDP. So this purple line down here, that's a floor pivot. And we haven't hit it yet. So we missed it. It won't count until we get through the entire trading day today without ever having hit it. Then we'll look back and we'll say, look, it was a MDP, and we'll count it tomorrow. But price wants to hit this. It does it more than it doesn't, right? There's a stat to it. It used to say 80%, but really it just depends on what market you're looking at. So generally speaking, price wants to hit its pivot point every day. And statistically, it hits it more often than it doesn't hit it. So it's, there is a base case argument that says we'll go down and we'll hit that line just because that's what we do most of the time. If we don't, though, then we'll count it as an MDP. It's worth noting that yesterday was a really big expansion day. And because of that, our SNR levels are in different locations than they normally would be. They're pushed farther out. So this green line and that red line is our SNR levels for the day. Each day they're in a different spot, and they are placed there mathematically, right? They have no other function other than it's just from pure math. Take a look at the size of that box compared to the size of this box. You can see the difference between those two. The green line is closer to the floor pivot and the red line is farther away. The pivot is telling us that the direction or the bias is to the upside, not the downside. You might look at yesterday and say, well, we went too far, too fast. It owes us a pullback. We're too extended. This says we're not, and that you should still be looking to the upside. Remember, this is just math, right? So you don't want to go running out there buying a bunch of calls just because this thing isn't going to make price do anything. But in the indicator itself, it's giving you the bias to the upside. Otherwise, the red line would be more equal to the green line, or the green line would be farther away to the downside and the red line would be closer, right? These boxes would be flipped the other way. So even the floor pivot is still suggesting we're not done yet. That move yesterday still has an upside bias for more. 64.95 is the R1. You do have to be concerned about an R1S2, right? That is the logic that says from today's open, we run and hit an R1, and then we drop to an S2. Of course, if we had opened underneath, we could have went to an S1 and then ran to an R2. Really, it would just depend on where we open. So if we do get to the R1 today, and we don't get above it and land on top of it, be mindful that we could begin to fall back, and the targets would be the channel top, then the floor pivot, then the channel bottom, and then S1 at the bare minimum. it is worth considering, where the 786 is at, and that's 6420-ish. 6420 is just above that S1 line. Do you like that? Lines up so nice. So we got a really sharp distribution out here, which also gave us this shallow zone. Should we break 6460, then we should cut right through that 6450 really easy and drop back down inside this value area zone. It's interesting to note that we really didn't see the kind of activity on 6450 that we would expect, right? We've been running 50s. Where were they yesterday? They certainly didn't defend that level because we ran right through it. We don't have anything else up here. And if you think about the amount of distribution that we got across this level, it was significant. So when we ran into it, that's where everybody was hanging out. We talk about the call wall all the time and how when we get into that kind of level, it would just activate some call selling, and how we shouldn't deem that as an area of resistance or a wall that we can't get through, more of just a level where we would start to see shorting activity begin. And this highlights that, but we still dominated and went through it anyways. The question is, are they now holding in a negative position, or did they move out and are they now somewhere over our head? Of course, you can't see that from here, right? You need the dome. Bookmap or jigsaw with depth of market. 10-day, 30-minute volume profile in TPO. We're not expecting to see this point of control move anytime soon, at least a week. And the amount of activity that we put in yesterday at that 64 area, it's a drop in the bucket compared to this 10-day level. So it was nice to see. I mean, it's a lot of work, but is not even close. It's not going to move this line. And we're not going to get to the candles. I mean, we're working on some of them now, but I don't think we're going to see this thing move anytime soon. Suppose I'm wrong. It's happened before. And we wipe out these candles, and these candles are actually the dominant amount of volume that's giving us this point of control. It's possible. Then it's likely that we will see it default down to 6380, and we'll come in tomorrow and it'll be there, because that's the next level, right? Until we get into these candles and these, that'll be its new home. Thing is, I don't think that these candles are going to be enough to move this point of control. Really, we'll just see when we get there. We're working on them through the day today, so you can just keep popping back into this time frame and checking on it. The point of control from yesterday has already been hit, and we cut through it. It may be worth marking that level out just in case we go back down there again today, but it's not a VPOC, right? So it's a point of control that may have some interest to it, but it's not our classic VPOC. For today, we've already started with this double distribution, even though we're in a really tight range. So you can see from the IB last night where they were putting in all their work. And then now after the push up, the work that we're getting up here at this 6482 area. 82 used to be a cog line back in the day, but that was back when we were in like 3200, right? 3282, 3182, 3082, back in those days. It wasn't that long ago. Look at me like that. I ain't old. There's a little discrepancy between the volume profile and the TPO, but it's not much, right? Not in the grand scheme of things. And if we do drop back down inside of yesterday's range, should see a support function at that 64-66 area, the today's point of control. Be mindful, we want to keep our eye on today's point of control, looking to see if it's actually going to shift up into this new level. And then, of course, where are we at in relation to it? Once it gets up here, as long as we're still hanging out, it won't act as a support or resistance. It's once we get away from it and then come back at it again that it would act like that. $65.10 is this week's expected move high. It's kind of in the middle. It doesn't match either one of these levels. It's odd, right? Most of the time, the levels they just match. It's not because of anything that we do. They just match. That's just the way it goes. And this time they're not. So I don't know. It's just odd. It stands out. There are other ways we could have measured this that may have indicated that level, but they're not as common as the one that I just marked. So, form fitting the drawings doesn't really make sense. It just stands out as a level that I don't trust, other than it's a cog line, 65.11. This indicator sometimes behaves a little wonky anyways. I'll trust my drawings over an indicator. We're 3.3% above the 10-week, and that is not overbought. It's not overextended. It has not moved too far too fast, and it does not owe us a pullback. Are we, touching the edges of extreme? Yeah, we're getting near it. What do they say in the Fed? That it's thinking about reaching extreme levels, but it isn't there yet. Yeah, it's not there yet. Once we get above 4, we need to start getting concerned about how far we're traveling on a day-to-day basis. But at this point, we're not at 4 yet. We're not even at 3.5 yet. So when we look back on the year, we've certainly been higher than this and continued to drive to the upside, right? During all of this, when we were up here at 5, we stayed green for like a week and a half, nothing but green days, day after day after day after day. And we were running red hot and it didn't stop, right? So no, we're not overbought. We haven't moved it too far, and it doesn't owe us a pullback. It doesn't mean that we can't pull back, right? Just that it doesn't owe us one. And looking at the 10-day, we're just above 1%. It's not even close to being extreme. We're still in this zone that we've built out on the year, and there's nothing wrong here. So we're good, we're healthy, and there's no reason to think that we should be trying to short this market just because we went up yesterday pretty hard. If you got other reasons to short, by all means, short it. But if the only reason you're shorting is because yesterday was a big day to the upside, that likely isn't going to work. Lots of breakouts. Not a surprise, right? Metals and mining is a little surprise. So VIX is down again, which is the thing is getting to the point where it's nearly broken. And Mag 7 down volume is down. I know it's a little weird because double negative, but it's a positive, right? It's a good thing. Looking at what's up, China again, China, precious metals and metal miners. China Bitcoin, Mag 7, solar, which is nobody cares, banks, nat gas. From a rally standpoint, if we have Mag 7, Bitcoin, and China, we got enough to run. That's really all we need right there. It would help if we get some 0-day flows or some, institutional push from the 0-day crowd. And if we could get like a broader tech rally, because we got finance, right? We got finance, technology, cloud computing, consumer discretionary, Bitcoin, and China. I mean, that is more than enough. See, quantum is moving around this morning, and chips, they're just not there, right? SMH, it's a little short. It's at 43. We'd want to see this at 0.5. Same thing with quantum. It's just not there yet. It's moving in the right direction. Twelve names out of 100 to the upside in the S&P. Not really feeling so bullish on that, right? And for the NASDAQ, 28 out of 100. That's 28% of the NASDAQ is up a 0.5%. Lots of semiconductor names. And then, of course, we got Tesla in there. That's it. Out of the whole Mag 7 space, we have Tesla, which took enough of a beat down that it's, more of a reaction on the other side than anything else. So we don't have the Mag 7 this morning. We got the Mags complex, which is very likely because of Tesla's move, but that's it. So we want to see those guys come in and participate. Let's look at the other side. I know we didn't see anything on the other side, but it doesn't mean, yeah, two. Target and Intel are negative a 0.5% or more. All right. So ETF wise and sector wise, we've got what we need. Individually, going in and looking at the actual names that are required to, get the push, we don't got it. So keep your eye on the breadth today, the broader market, to see if we can get that push to come in. Otherwise, we play the boxes, right? GTFO, got to get out of the box. Start with our own Globex range. If we get out of this to the upside, you can just measure the entire thing and project to the upside. That would give you 64.90 basically for the next OCC. And if we get out of this to the downside, then we want to focus on yesterday's RTH levels. So yesterday's high to the low. Notice I'm not using the overnight of the previous day. 64.40 to the midpoint. 42 used to be a cog back in the day. Also, this is a 111, yesterday's 111, which is one of my favorite trades. If we measure all of yesterday, not just the RTH, but the whole thing, yeah, I think that's the low. Then we've got above the 111 and we're holding it here, resting on it, but we're not yet getting up into that 1, 2, 3, 6. This is an odd reaction function here like this. I'd rather just use the RTH of yesterday. So put it back where it was. That makes more sense, right? When I play these yesterday 111 trades, most of the time it's a short off of that level, right? And it's not like I'm saying that we're going to go to 64 today or, break 63.92 cog and go lower. I'm not saying that, not that kind of short, just a short off the highs and staying within the range that we've built here. This is our new zone, right? If we come back inside this bar, then this will be our new home for a while. And all of this would look like a doji at that point, right? We would have left the wick behind and we would have fallen back in if we just hold out here. If we fall even lower, then screw the doji, it'll just be a red day, right? It could even end up like a red day like this bar. That bar where we did a little loop-de-loop and then we fell back down again, this red bar. If we fall away today, that's likely what we're going to leave behind, right? Is that kind of a wick? And that would put us in this zone. Then we can retest the 3 period and then the 10 if we keep going to the downside. But it's not supposed to be that negative, right? And until this bar closes today, the one that we're in currently, then this breakout above this previous high, we don't know if it's going to stick until it closes above. For all we know, that we're going to fall back down and leave a wick behind today. So the day ain't done. More than half done, but it ain't done yet. Watch the clock. Keep your eye on the news. Look for any headlines that talk about the Fed and that cut. Anything that can really, throw a wrench into that plan. And then broad market breadth, because a rising tide lifts all boats. That's what we're looking for today. Everybody be careful, be safe.